Okay guys, welcome to module 1 of the Breaker Trader course. This is the basics course, if you like, basics module rather. What we're going to do here is just sort of cover the general course criteria, have an overview of what we're going to go through and look at some basic Forex stuff. This is a sort of basics module, if you like. There's a lot of people I've seen in the Telegram group that have got very varying degrees of experience trading Forex. Some of the concepts that I'm going to go through here are fairly complex and may require a bit of understanding of basic Forex strategy and how the systems and how the market works. So if you are new to Forex, obviously please make sure you try and get into the live trade room and ask questions, because there's a lot of bits in here that you may struggle with, and that's absolutely fine. Everybody's at different levels, but I'm aiming in the course and every module to give you enough information to be able to trade in the way that I trade, and hopefully to understand what I'm talking about. But there is no substitute for chart time. I'm going to give you homework in these modules as well, which you're going to love. And the reason I'm giving you homework is because I want you to spend time in the simulator, and I want you to spend time watching price move and practicing. It's the only way you're really going to get a good understanding of price movement, how the market moves. So a lot of what we're going to cover in this one is just about the basics of MT4, brokers, and all the stuff you need to know to get up and running as a trader. So let's get on with it. Let's start module 1. And first slide we're going to look at is what we're going to cover in the course. So I've said over the next 7 days, there's 7 modules, and ideally what I'd like you to do is just do 1 module per day, and really watch it a couple of times, try and understand it fully, and if you're in the live room with me, come and ask questions about that particular. Watch this like Netflix, that's absolutely fine. You can fly through all 7 modules. Some of these are probably going to be fairly long, but please do the homework in between, because it's important that you get a good grasp of what you've just learnt and see it playing out in a practical environment. Also, I know this is going to get out on the web. There's no course in Forex out there that doesn't get shared out there, but please, if you can, I've spent 10 years of my life and I'm pouring this out. 10 years of my life trading Forex, and I'm pouring this out for you here. So this is kind of my life's work in Forex, and while I know it's going to get out there, please, if possible, don't share it on the Telegram groups and Google Drive and everywhere. Really appreciate it, but you know, hey, this is Forex. Anyway, let's get on with it. So over the next 7 days, we're going to have I've put there a live class. I've decided not to use live classes purely because the time differences I've discovered in the Telegram group, especially for people, we've got people all over the world. So to actually deliver this class live is very difficult to find a time that suits everybody. We've got people in Australia, America, South Africa, the UK, everywhere. So what I've decided to do is restructure this slightly into these recorded sessions, and we've got the live room where you can come in, and if you want me to recap on any part of the course or go over a module in detail, I can do that in the live room and you can ask questions. So this is probably the best way to do this. Sorry, my dog's going mental. If you can hear that in the background, hopefully she'll shut up. Okay, so that's how the course is going to be delivered. This is the basics module, as I said. So we're going to look at MT4, brokers, all the basic stuff, price action, patterns, the things you really need to understand to just be able to trade. Okay, so this is kind of the foundation that we're going to put in this particular module. The next modules we're going to look at are going to be to do with market movement, gaps, imbalances, which is very important. This is how the market moves, and you need to understand that in order to be able to trade effectively. We're going to look at the indicators. We're going to look at how institutions trade. I'm going to show you how to plan entries and how to calculate risk properly, and how to go into drawdown, accept drawdown, and use drawdown to your advantage so that you can make a profit out of the market. The way that I trade, which you've probably seen in the Telegram group if you've been in there, and that's how you've discovered this course, is I trade without a stop. Without a physical stop, I should say. I have a stop loss. It's just not a line in the sand that is drawn under a particular price point. And I'm going to show you how to trade in that way. And I want you to trade in that way. Even if you decide you want to go and use physical stops, I want you to try the way that I'm showing you, so that you can get experience in the market and see how the market moves after you've entered. And I'll explain more about that when we go through that module. I'm also going to give you the exact entry criteria of how I get in and out of the market. So you're going to have a set of rules for my entry criteria for the different strategies that I use to get in and out of the market. So it's going to be very clear as to whether you should or shouldn't be taking a trade. But what we're not covering in this course is what's in the free lessons on the website and that I've put out onto YouTube. So the basic order block breaker indicator strategy, if you like, is H4 trend direction and M15 entries. That isn't what I'm going to be teaching in this course. That is the basics. I expect you have probably watched all of that, which is why you're here. If you haven't, head over to YouTube or have a look on the website. There'll be a free course or a basic course that you'll be able to see. With that strategy, that is how I used to trade. And that strategy works extremely well, and there's a lot of people using that strategy and getting fantastic results. Got people in the Telegram group, and people contact me all the time saying how great it is. There's reviews on the indicator on MQL5. So yeah, don't rule that out. If you want to trade that way, trade that way. What you're going to learn here though is a more advanced style of trading with order blocks, and also using levels and basket trading, which is a more effective entry and exit strategy. Okay, so let's have a look at what you're going to need. Obviously you're going to need MT4 because you need a platform to trade on. Please don't try and trade on mobile or tablet. First of all, the order block breaker indicator and dashboard only work on MT4 desktop version. But secondly, you cannot get all the information on the screen that you need, i.e. looking to the left and seeing levels on a mobile phone or a tablet. So many people out there showing P&Ls on mobile phones, and you know, these guys are not making money regularly on their mobile phone. It's a myth. You cannot make a fortune in Forex trading on a mobile phone. If you could, I wouldn't be sitting here talking to you now. I'd be on a yacht somewhere with my mobile phone making a fortune. It just doesn't work, okay? To get an MT4, you're going to need a fairly decent PC or a laptop. MT4 is quite hungry, and especially when you put high demand indicators like the dashboard onto your MT4, it can suck quite a lot of juice out your processor and your RAM. So if you can get a gaming PC or a gaming laptop, you can pick them up fairly cheap, but just something with a decent processor, a Core i5 or higher, 8 gig RAM minimum. That's all you're really going to need. The dashboard is monitoring, you know, sort of 20-30 pairs across multiple time frames continuously for breakers, and it's monitoring other things as well. So it is fairly resource heavy. So if you're going to run the dashboard on your machine, you're going to need a fairly decent PC. You can also run the dash on a VPS. I'm not an expert in VPSs, but obviously it's got push notifications and email notifications on the dash. So you could set it up on your MT4, push it out to a VPS, and then just use email alerts or push notifications. It's not something I really do or I've particularly tried, but I know people are doing it. So, but basically just get a half decent PC, yeah? You're going to need the indicators installed and my template. Now, the templates that I use, let's just have a quick look at it. Okay, the template that I use has the Asian session, London session, and New York sessions marked out. I use the TDI Pro indicator. which is basically for the RSI levels, and it also draws in divergence. That's why I use that one. You can trade, if you want to, just using a standard RSI 21. The RSI, we're going to go into this in more detail in the indicators section, but the RSI 21 I set to medium price, high-low divided by 2. And you can, draw additional levels on. That's the 68, and I draw an 80 on it when I use the RSI. But the template I've got is in the Telegram group on the pinned message. If you want it, you can always inbox me or ask via the site. I'll try and get it actually put up on the website as well, so that it's there for the course. And obviously the order block indicator, and yesterday's low, yesterday's high, and ADR indicators. So the template and the indicators you're going to need installed. Most of these are standard indicators. They're not indicators I've created, apart from the order block breaker and the dashboard, obviously, but all the other indicators used are standard indicators that I've found and used in other courses, or I've just found on Forex Factory or on the web, basically, that do what I do and give me the information I need to make trading decisions. Keep your charts as clean as possible. Stop putting hundreds of indicators on them, squiggly lines, moving averages. You can trade moving averages if you want. I don't teach trading moving averages, and I don't use them myself. But keeping your charts clean is important. You need to be able to see price action candles. You need to be able to see the candles. You need to be able to see when there is a bearish engulfing. If you've got too much stuff happening on the chart, you can't see this information. Okay, so just keep your charts clean. If you want to use white background or black background, absolutely up to you. Get the template installed, and if you want to muck about with the color scheme, nothing wrong with it. I've got no problem at all. If you want to change the color scheme, but get the indicators installed in my template initially, and that will help you when we go through the training, because you're going to see on your platform what I'm seeing on mine. The order block breaker indicator is not essential. You need an understanding of order blocks, and I would encourage you to get the indicator. It's $49 on MQL5. It draws the order blocks and the breakers in for you. They are a key part of my strategy. The way I'm going to teach you to trade, you could trade without order blocks. I use order blocks as an entry criteria. You can draw these in yourself as well. Okay, so there's other criteria that you're going to find in when we go through the last module and look at my setups. There's other criteria that go into taking a trade as well as the order block breaker indicators. So I'd encourage you to get that. The dashboard obviously is great because it gives you alerts on multiple time frames. I use the dash a lot in the live room, so if you're in the live room with me anyway, you're going to be seeing me looking at trades off the dash, and you're going to see alerts going off all the time anyway. So this is an important bit. I don't know if you've taken a trading course before or not, but these can go on for a while, and there's going to be a load of golden nuggets that you're going to spot when you're going through this course. And there's no notes. Okay, I might make these PDFs available, but of the PowerPoint, but there's no notes, there's no takeaways. I want you to take notes yourself. Get a notepad or a Word document going. Take notes of things that you find useful, that you find important on the course, and also write questions down, because we're going to have a Q&A session at any time you want in the live room. So if you've got a question, write it down and come and ask me, or ask someone else in the Telegram group. Basically, the best way to learn, I found, is watching a video, putting it into practice, but making notes of what you've seen, because not everything you see you're going to need to write down and note. Some of this stuff you're going to know already. If you've been trading 2 or 3 years, you'll have an understanding of a lot of the stuff I'm going to teach you possibly. So there's no need taking notes on that because you know it. But if you're new, there's a lot of things you'll probably want to take a note of. Maybe take a screen grab, take a screenshot of something when you see it, rewind the video, I don't know. But take notes. By making notes on notepads and writing things down in a Word document or in paper, it makes a better connection with your brain, and you can refer to it at a later stage as well when you want to go through and do a little recap. Okay. Chart time. time to practice. Whatever you do, whenever you take any course and you try and do any job, you're going to need to practice, and you're going to need chart time. In this course, I'm going to show you how I got chart time under my belt by using trading simulators. I think trading simulators are a fantastic way to give yourself confidence in any strategy, system or indicator that you use. The main reason being is that you can backtest. People ask me all the time, what's the strike rate of the order block breaker indicator? There's no answer to that. You backtest it yourself and you see when you would have taken a trade. The order block breaker indicator will draw order blocks and it will draw breakers on a chart. Whether or not you take a trade on those is entirely down to you as a discretionary trader. By putting the indicator and other things that I'm going to show you into a simulated environment, you can go through very quickly in time and see how things play out. So a lot of the homework is going to be based around you going into the simulator, using the strategy tester in MT4, and I'm going to show you a simulator package that I've got, which is not free. I think it's only about $50 or something, but I use it because it allows me to actually take trades in real time in the strategy tester, which is going to help you know and putting into practice what you're going to learn on the course. Okay, so chart time is important. One of my mentors said to me when he was teaching me, I was with him for about 2 years, and it's always stuck in my head. He said to me, until you've got 1,000 hours of chart time in front of you, you're not going to be successful. And when I first started being mentored by him, I thought, that's a load of rubbish. I'm an intelligent guy, I can understand how this works, and as long as you teach me correctly, I'm going to be able to do it. But it's not until you actually start trying to put this into practice that you will understand that you have a muscle memory with charts that will only develop over time. The more time you spend in front of a chart, the more the candlesticks and the repeating patterns that you will see and that I utilize on a daily basis to make money will get stuck into your brain, and before you know it, you'll start seeing charts like the Matrix. It's difficult to explain, but you'll just see patterns forming before they form. So M's and W's now, I used to look for a formed M. Now I look for half a formed M, and I know the rest of the M is coming because of certain other conditions in the market, and you can only get that experience through chart time. And that's why simulation is so good. I can sit there on a simulator and go through 3 months of H1 candles in 5 minutes. So I can see, I can see 3 months playing out in front of me very, very, very quickly. So we're going to encourage you to use that a lot more, and it's going to help you to build muscle memory, and you'll see the patterns playing out over and over again, and that is very, very important. Everybody will say this to you in any trading course. Trade on demo with a reputable broker to start with. A lot of you will be live, most of you will be live, because you get into trading, the first thing you want to do is make money, so you get a live account. I don't know how many you've blown some probably, otherwise you wouldn't be here watching these videos, and if you haven't and you're still on demo, well done. But you're probably going to want to demo trade initially. I would suggest when you start demo trading, you get a demo account with a broker that is equivalent or as close to equivalent as possible of what you're going to trade with in real life, because that's going to teach you correct lot sizing for the account that you're going to run. So there's no point going off to a broker and getting £100,000 or $100,000 demo account if you're going to start trading with £1,000 live account, because you're just not going to be used to the correct lot sizing. If you can't find a broker that's able to give you a variable demo account so you can select how much you want in your demo account, just shop around or just pretend that you've got 1,000 in there rather than 100,000. It's hard to do, but try and trade on demo. Reputable brokers, there's loads of brokers out there. There's loads of crooked brokers. I say crooked, I shouldn't call them crooked. There's loads of brokers out there that manipulate the market and the spreads more than others. Let's put it that way. There's regulated brokers, there's unregulated brokers. There's brokers that are regulated in some countries but not in others. Personally, I'm in the UK. We have rules in the UK which means that we can't have more than 30 to 1 leverage. 30 to 1 leverage isn't enough. for the way I trade anyway. On a small account, or if you're trading small lots on a decent size account, 30 to 1 is probably plenty, but you want to look for a broker that's got 100 to 1 or more leverage. The best way if you're in the UK or in other countries where they've got regulated leverage is to look for brokers in Australia. So people like AxiTrader, Pepperstone, IC Markets. I think IC Markets actually is 30 to 1 now, but there's brokers out there where you can get 500 to 1. They won't be regulated in your country. So Axi, who I use as my main broker, I switch brokers all the time, which I'll talk about. But the Axi account that I've got is 500 to 1 leverage. But I only keep a very small amount in the account. So I trade a personal 30k account, but I only have somewhere between 2 to 10k in my account at any one time, and I draw it out once I've got the profit. So I keep my risk with the broker very, very low. All right, but yeah, get a decent account with a reputable broker. Get one with a regulated broker. Okay, they don't have to be regulated in your country necessarily, but they need to be regulated in the country that they originate from. Finally, patience. You're going to need patience. This is not going to happen overnight. I would say the average time it takes from what I've experienced to become a profitable trader is somewhere between 2 to 3 years. Most traders I know that are profitable have taken a lot longer than that, including myself. I'm going to talk to you a little bit about my experience in a sec, but you're going to need to give it a couple of years. Right? If you've already put in a couple of years and you've got a good understanding of the market, hopefully this course and maybe some time in the live room with me is what's literally going to flick that switch and is going to make you profitable. It happened with me. That's how it happened with me. I've been trading for a long time, kind of small loss break-even trader. I discovered a strategy that worked for me. Literally overnight, I became profitable. But that's because I'd already put 10 years in. If you've only put 3 months into this at the moment, do this course by all means, but don't expect to come out of this in 7 days' time being a profitable full-time trader. It doesn't work that way. You need time and experience and time in the markets. You need to spend time and watching trades play out. So patience, give it some time. All I would ask is you spend 2 or 3 months trying this strategy out. Give it some time. One of the videos I've put on YouTube is why you're system hopping. You're system hopping because you don't give strategies enough chance to play out. The probabilities of a strategy working are never seen if you're hopping from strategy to strategy and not giving it enough time to prove itself to you. I'm going to hopefully help prove this to you as we go through the course, but more importantly in the live room I'm going to show you in real-time practice me doing this stuff. All right, so just give it some time and yeah, hopefully we'll get to where you want to be, which is being profitable. Okay, how it will work. We've got the live room that you can use if you're a member, of course, and that's mainly for watching the strategy being executed, asking questions, chatting to other traders, sharing ideas, that sort of thing. We're going to go through the subject matter of each module, obviously, in the recorded course, and then I need you to go and practice what is in that course module, and obviously ask questions about anything that is not clear. Note down questions and we'll cover them in the live room, and I can obviously give you clarification there further if necessary. If there is a particular module that you are really struggling with, and I find there's a few people struggling with it, then I'll probably run through the module again in a live environment where we can ask questions as we go. Some of these modules may well get re-recorded. Obviously this is being done slightly off the cuff. I've not got every single thing I want to say written down on paper. I'm running off of these slides. I'm going to be running off of charts and showing you live examples. So there may be bits and pieces that are missing out of the course that I'll add on as additional modules at a later stage, but a lot of that I think I'm going to get from questions. So ask questions, and anything that isn't clear or I haven't clarified or covered properly, let me know and I will obviously cover it in more detail. You've also got access to the Telegram group. I'm in there all the time, so are others. Ask questions. If I'm not there, someone else maybe will be able to help you.
It's a nurturing environment. I want the Telegram group to be a Q&A area as well as the live room. So don't feel afraid to ask any question in there. There's no stupid questions. Everybody's at a different level. So just be patient with me and patient with others. There's a lot of people wanting to know how to trade, and we need to just give it time so we can all help each other. You might know a lot of what I'm already talking about, so feel free to skip a class if you think I know all about this, but I'm going to be dropping golden nuggets in that you may well not have heard. And if that light bulb moment that you needed was in the course about support and supply and demand, support and resistance, and you think you knew all about it, absolutely fine. Just be aware you may miss it. Each of these modules is probably going to be an hour, 2 hours, maybe half an hour. I don't know until I've recorded every single module, but it's well worth sitting there for an hour or so, just in case you pick up that one golden nugget that you didn't know before. Obviously, I'll be in the live room trading. Trading's very boring. This is not, the strategy I use is not a 5-minute in out scalping in 100 times a day out 100 times a day type of thing. I get into 6-8 pairs maybe maximum, and I'll sit in them for days at a time, watching and seeing how those trades unfold and just taking profit out of them as they move. So don't expect to see a highly charged, exciting trading environment, which is one of the reasons I'm using the live room as a Q&A session as well, because 90% of the time, as you've probably seen from screenshots I've put up on Facebook and in the Telegram group, I'm watching Netflix, because unless that dashboard is pinging and alerting at me, there's nothing to do in the market as far as I'm concerned, apart from see how things are getting on and monitor trades every now and again. All right, so that's how the live room is going to work. A little bit about me. I'm 40 something years old. I'm a programmer by trade. I'm a very logical, practical person due to my programming experience. So I'm used to working in a kind of binary, if then this is what happens type of environment. And that has helped me to understand and develop probabilities and edges in the market, which maybe some people that haven't got a logical brain wouldn't be able to do. I've been trading for about 13 years on and off. I originally started in stocks before my first son was born, and I used a service called Day Trading Radio. He's still going today, which is absolutely fantastic. He's a stock trader, and I learned an awful lot, but I also learned that stocks aren't for me, and I didn't want to get involved in stocks. So I started flitting around with Forex, and after failing at Forex, I gave up twice over a 10-year period and came back to it after a break. I'd blown multiple accounts up. I've taken loads of different courses. Every one of them has given me something, and which I'm hoping this will give you something if you've taken other courses as well. But none of them made me profitable on their own. I learnt from Steve Mauro, who's BTMM, Beat the Market Maker. I've taken ICT's course, Mike Huddleston. He learnt order block theory and everything from Larry Williams, Chris Laurie, some well-respected traders, and the list goes on. There's loads of mentors I've had over the years. Kunal Desai is another good one worth a mention. Bulls on Wall Street, another stock trader. He is full of energy and an excellent teacher, but the way he trades on M5 as a scalper on the stock market just was not my way of trading. So basically all I'm doing now is passing down the knowledge I've learned over the last 13 years from many traders and courses and mentors that I've had. I've had 3 private mentors over the years as well. And the private mentors are people that I've met on Forex Factory and in other environments, and they've kind of taken me under their wing and tried to teach me the way that they trade and the way that they became profitable. These guys didn't charge for their time rather. A little bit like what I've done, I've pushed out a course for free, which is how I used to trade and traded very profitably. But every single one of the mentors I traded with also taught me an awful lot, but again, none of them made me profitable. I've tested loads of indicators, I've combined them together, nothing actually made me profitable apart from when I finally blew another account and decided to step back and have a look at why I was going wrong, where I was going wrong. And again, this comes back to my programmer logical brain. It said, right, there's loads of people making it here, there's loads of people doing this, I know people that are profitable, I've seen their P&Ls, I trade with some of these people. Why am I not able to crack this? So I looked through everything I'd learned over the years, from all the courses I'd done, the videos I got, the PDFs, the spreadsheets, and I picked out, after reading and watching everything again, all the elements that I found made sense to me, and I put them all down on a piece of paper, and I started forward testing different combinations of these indicators and strategies and methodologies that I'd learned over the years. And that's basically where I've come to today. So what I'm going to teach and what I trade is nothing new. Nothing is new in Forex. Every course you take will have combinations and elements of other people's styles and strategies. There's loads of content, as you'll know, all over the web. But I put it together in a way that works for me, and this may well not work for you. But if you get something out of this that enhances your trading or helps you turn a corner from being non-profitable to being break-even, I've done my job. Okay, it is a journey, and you've got to go through that journey to learn how to trade. And your journey length is going to be different to my journey length, which is going to be different to somebody else's. We've all got different amounts of time we can put into education and to practice and to trade. Some of you are going to be able to trade in the live room with me on M5 and M15 charts. Some of you aren't going to be able to trade that way. You're going to be trading daily in H4 because you can only spend an hour a day looking at charts and analysing. So everybody's going to be different, but what you're going to get out of this course is a solid foundation, hopefully, and an understanding of everything that I have found useful. So think of this like 10 different courses, 13 years worth of education by top educators, stripped back, all the rubbish taken out of it, and here's the bits that I think make sense and make me money. All right? Okay. In a nutshell, I've probably just covered this, but I'm going to teach you how to trade comfortably and to make consistent profits every day by trading in an institutional way. All right? I don't trade in the way that my free video course shows you. I used to, and I don't have a problem with trading that way, and I do trade that way sometimes. But institutions trade in a different way, in the fact that they scale in and scale out of the market in a completely different way to using a fixed stop loss and take profit target. You may well disagree with some of what I say or disbelieve it, because there's a lot of people out there that don't like to trade in certain ways. They think there's only one way to do it, and until you've tried all the different ways, as I said, you're not going to know whether this way of trading is right for you or not. So all I'm asking is that you give the method of trading that I'm going to show you a month on a demo account. Okay, if you've not increased it by 10 or 20% by the end of that month, if you're in the live room with me, just feel free to cancel and continue your system hopping journey. And I don't say this in a bad way. There's nothing wrong with system hopping. I've done it. Everybody does it. It's part of the trading journey. You're going to system hop. But give this strategy a month. Okay, try it for a month. See what happens in the market. See what happens to your entries, your positions, and your trades. And if you come out of it and you've got a break-even demo account, what have you lost? Nothing. What have you gained? A month's worth of experience in a live room with a guy that can turn a profit on a daily basis. Okay, so that's all I'm asking is you just give it a month, trade on demo for a month with me, see how we get on, and I'm pretty sure most of you will be able to come out of it with a good profit on your demos. All right, and then we'll look at getting you on live. Okay, so first thing I want to cover are some basics of Forex. So we're going to look at price action candlestick patterns. Now, you've probably done these to death. If you've done Baby Pip's online course, babypips.com, I'd definitely go and do that. It's a basic Forex course. You're going to learn about price action. Price action is basically just candlestick patterns. So I'm going to look at the various types of candlestick patterns that are out there, and I'm going to look at the important ones that I have found to be the most effective, and we're going to see how they're formed. I'm going to assume you have got a basic understanding of how a candlestick is formed. Okay, you've got a high, you've got a low, and you've got the body and the wicks basically, which are open, high, low, close. All right. I'm not going to go into candlesticks and how they're actually formed. Go and Google it. There's loads of resources out there, but you need to understand price action. You need to understand what's happening inside a candlestick. So these are, let's go back quickly one. These are all the main candlestick patterns that you're going to find on the web. All right, there's loads of them. A lot of candlestick patterns are from stocks. So there's a lot of candlestick patterns you will find that you won't see ever happening in Forex. So for example, upside gap two crows, right? That's when a gap forms in a stock due to an overnight move in price or something happening, and then red candles coming down from these two candles which form the two crows pattern. You're not going to get gaps like this in Forex because the Forex market is open 24/5, right? So some of these candlesticks patterns are absolutely useless to us as Forex traders. So we're going to concentrate on 4 candlestick patterns, which are the ones that are the most effective when we get to levels, which I'm going to talk about, that price is likely to turn at. All right. So first one is the hammer. Okay, the hammer and the shooting star are the same thing, which is basically when price is moving down, we get a long tail forming on a small body of the candle. Okay, these hammers and shooting stars you will see all over your charts. All right. So let's have a quick look at. Actually, let's quickly look at some charts. See if we can spot some. So let's zoom in here and have a look. See if we can see some hammers and shooting stars on the chart. It's typical. There we go, there's one. Okay, so there's a hammer. Okay, that's another hammer there. Class that one as a shooting star. All right. So hammers and shooting stars will appear all over the place. There's a shooting star there, right? And a hammer and a shooting star. There's loads of them actually if you look. But the thing that's important about this candlestick pattern is these are completely useless and invalid where they're positioned now. All right. Hammers and shooting stars we only pay attention to when they appear at the top or the bottom of a price move. Okay, so I'm going to see if I can find one. That's more of a doji, but it's very, very close. Okay, so this would be a valid hammer if it looked like that had a little bit. I'd like to see it with a bit more of a bigger body, but the long tail is the important thing. Now, when price has done a big move down, what this is indicative of is lots of selling pressure coming in, but more buying pressure coming in the sellers. And what it creates is a long wick, which means that I can't go down anymore. And we close with usually a positive bodied candle, so a green candle in this case. If it was a hammer at the other end here, a shooting star rather, at the other end, it would have a red body and a long wick to the upside. So these are only valid when they form, here's a good one, at the bottom of a move down that has just happened. Okay, so what this is indicative of, which I'm going to talk about more, is a stop hunt. So this is basically the market taking price down below a level, picking up people's stops, and then pushing back up into positive territory with the view to move forward. So when you see these candles after a long down move, that's when we're going to start paying attention to them. Right? So that's a hammer, that's the shooting star. Bullish and bearish engulfings are also patterns that I use on a regular basis. Bullish engulfing is where the body of the candle engulfs completely the body of the previous candle. Ideally, the previous candle would be the opposite color. All right, so this is a bullish engulfing. So this is showing that price has moved down. We've got a small candle here and then a large move in the opposite direction on the very next candle. Okay, and the opposite for a bearish engulfing. So it's just a big candle that is bigger than the previous candle in the opposite direction. So let's have a quick look for some bullish and bearish engulfings. There's an obvious one there. Got to move up. Got a big candle in the opposite direction to the previous one. That's a bearish engulfing candle. Move up, big bearish engulfing candle. Move up, big bearish engulfing candle. These are really easy to spot. So let's look for a bullish engulfing. There you go. Down candle, big bullish engulfing. So this is a much bigger positive candle than the previous negative. All right, bullish and bearish engulfing. So those are the 4 candlestick patterns that we're going to look for. I'm not going to spend too much time on this. There's loads and loads and loads of candlestick patterns, as I say. You might find some that work really well for you. Over the years, I've tried all the candlestick patterns, literally all of them. I've bought indicators that will alert you to every candlestick pattern under the sun. I've thrown away everything but these guys, because these guys are indicative of a certain condition that we're looking for in the market, and that condition is a stop hunt. All right, shooting stars and hammers happen a lot at stop hunt areas. Bullish and bearish engulfing patterns happen a lot when breakers form and on retests of breakers, and that's the reason why we're concentrating on these patterns. Also, to simplify it for you, okay, I don't want you getting caught up in price action, hundreds of price action candles all over the place. Concentrate on these guys and then expand your knowledge, but start small. Okay, start with these first, and then we can look at more as we go along. One other candlestick formation that we're going to look at is multiple tails or tweezers. This is an example of tweezer bottoms, and you also get tweezer tops, which is obviously this inverted at the top of a move. All right, so there's tweezer tops and tweezer bottoms. All this is long tails, 2 candles with long tails right next to each other, ideally at the same length, but close enough that you could say, yeah, they're pretty much the same length. All right, this is an indicative stop hunt move again. See, we've got a nice hammer here, push up, push back down, and then we get tweezers. All right, now what this is basically doing is we're stop hunting this level here, and then we're stop hunting the level again just to make sure. So anybody that got in here will be taken out by the second stop hunt. All right, we're going to talk more about stop hunts because it's a very, very, very important core of the strategy. But look out for these tweezers. There's indicators out there actually that alert to these if you want to use them. I mean, I don't use indicators for this because I see them and I know they're forming automatically now anyway. But if you want to get indicators that will alert you when bullish, bearish engulfings, shooting stars, hammers and tweezers appear, there are indicators out there, some free ones, some paid. Go and research on MQL5, go and have a look on Forex Factory, wherever you want. But you'll find some, but we're going to be looking out for those. Okay, so there's 5 patterns we're going to look for. The tweezers is less common, but when you see them at the bottom of a long move like this, pay attention. All right. Selecting your time frame. This is a critical part of becoming successful as a trader. If you choose the wrong time frame, you will not only burn out mentally, but you will find it very difficult to trade. One of the things you have to decide as a trader is what time frame is suited to your psychology and your mental kind of state, if you like, as a trader. Some guys out there will trade M1 and M5 charts and they'll be scalping constantly all day long, and their psychology, they can handle that. Other traders like me, I can't do that all day long because my eyes start to hurt and my brain starts to hurt, and I can't concentrate on 26 pairs for that amount of time on 5-minute and 1-minute charts trying to find trade entries. Also, another thing that's going to determine your time frame is how much time you can spend in front of charts. If you're working a day job at the moment and you can only check your charts in the evenings, you can't trade M5 and M15. You can only trade hourly, 4 hourly or daily candles because you cannot check your charts very often. So if you can only check your charts once a day in the evenings and once a day in the mornings, you're going to want to be an H4 time frame trader. Okay, so you might be using H4 for your entries and looking at maybe daily or weekly time frames for direction if you want to use a higher time frame for a direction. Okay, so just have a think about it. And one of the reasons I say this is a critical part of becoming a successful trader is because the markets are fractal, meaning that you will see the same patterns playing out on all time frames. And the same strategy that I'm showing you here, or the same strategy that you use for order block and multi-time frame trading that's on YouTube and on the website, you can switch time frames and use exactly the same strategy and entry criteria on any chosen time frame. So if you're trading H4 on daily, you're a swing trader. If you're trading M1, M5, and some people would say M15, you're a scalper. You've got to get this right. You've got to decide on a time frame and stick to it. And this is the important thing: stick to the time frame you choose. All right. I trade a lot on H1, and the reasons for that will become clear as we go through the course. But H1 is an excellent barometer for average daily range moves, and also the RSI or the TDI levels work extremely well on the H1 time frame. So I use that a lot for analysis, and I use it for entry as well, and I also use it for finding levels of support and resistance to trade from. That's just where I've settled. You may well settle on M15 or H4, but I would encourage you to try different time frames. And the way you can try different time frames is by going into the simulator. Okay, so you can go into the strategy tester or use a trading simulator to try trading on different time frames. Now, the higher the time frame you go, the more accurate any system or strategy is going to be. Lower time frames have got more chop. So in M5 and M1, you're going to get a lot more chop up and down. You get stopped out a lot on those lower time frames, whereas if you're trading H4, the price moves are much more slow and much more accurate. So a bullish engulfing or a hammer on an H4 chart is going to be way more effective than the same thing on an M5 chart. Okay, if you're new to trading, as much as I know you want to, because I was there, as much as I know you want to trade M5 and M15, if you're less than a year's trading experience, start on H1. Don't go lower than H1. I know more profitable, successful traders that use H1 than any other time frame. Okay, so that's where I would basically pitch you. If anybody said to me, which time frame is the best to trade? H1. H1 is where you start. Try different time frames from there. But if you can only trade in the evenings and you've got a full-time job, use H4. So as I say, your day job is going to determine which time frame you go to. Basically, rule of thumb is every time the dashboard pings, you need to be able to go and check a chart. If you're trading M15 and the dashboard pings 3 times an hour and you can't check that chart, you shouldn't be trading M15. Okay, so use that as a barometer. Another thing that you probably laugh at, this is kind of to do with psychology, but your temper will have a big input as to what time frame you should be trading. On low time frames, M15 and below, you are going to get chewed up and spat out way more than on H1, H4 daily time frames. Okay, if you've got a short temper and you get cross easily, the market is going to drive a stake through you. Okay, if you're trading low time frames, because you are going to experience a lot more loss and a lot more pain on lower time frames than you will on higher ones. If you're cool, calm and collected, which you really need to be if you're going to be a scalper, and on M5 and M1, then yeah, that's fine. But most people don't realise this until they're actually in there, and they, it took a while for me to take a step back and go, why am I getting so cross on scalping? I'm good at it, I know how to do it, but it just winds me up, and it's just basically my temperament wasn't right for that particular time frame. And when I started implementing the strategy on higher time frames, everything became clear and everything started to click. So take that into account, and also another thing that's going to affect you is your result appetite. If you want to and need to see results fast and you're trading on H4, it's not going to happen. Your average hold time on an H4 trade might be a week. All right. So if you're the type of person that needs instant gratification, and a lot of us are these days, trading H4 isn't going to do it. If you want to make £5,000 a week in H4 trading, you're going to struggle. So that's something that's important to understand as well. The higher the time frame that you enter on and monitor your trades on, the longer they're going to take to play out. Okay, let's have a quick look at an example of that. So this is an M5 chart. Okay, so let's say I took this bearish engulfing up here. Let's say actually there would have been a breaker somewhere around there. Okay, we'd have had a breaker around there. So let's say we took an entry there, and 40 pips. So let's say I was looking for 1.5 risk reward ratio, trying to get down to here. You can see that's taken me so 27 times 5 is 135 minutes divided by 60. 2.25 hours. I'm in and out of the market. Done. Profit. Banked. Let's take a similar trade on an H4 chart. Let's say we took this breaker up here. Okay, got 160, so we'll be looking for a minimum of a couple of hundred pips, so somewhere around here. Let's say we got out on this bullish candle here. Okay, that's 16 candles times 4 hours. Okay, that's 64 hours divided by 24. That's 2.5 days it's taken you to get the same risk reward ratio out of an H4 trade as it did out of the previous low time frame. Okay, so you see the difference can make a massive, your time frame you choose can make a massive difference to your expectations as a trader and what you're going to get out of it. Okay, basic Forex stuff, Q&A. I'm going to go through some bits here. If there's anything you don't understand here, or you feel that you need covering, either email me or hit me in the Telegram group or ask in the live room, and I'll try and cover it in more detail. But this is the basics that you should understand and know about. I'm going to quickly cover all of these and just give a little bit more information if I think anything is relevant, but these are bits that you might want to be asking questions on. Okay, so MT4, as we've said, you need to get up and running on desktop. If you're new to MT4 and there are any basics you can't understand, ask questions. How do you place a trade? How do you add a stop loss? How to add alerts? How to install indicators? All that sort of stuff. You can ask any of those questions in the Telegram group and someone will be able to help you, all right? Brokers, covered briefly. Find a regulated broker. I use, personally, my brokers are Axie, DarwinX, IC Markets and Pepperstone. Those are the 4 brokers I use. I switch brokers on a regular basis. Not because I don't trust any of the brokers, but I like to move things around and keep my money moving and keep it low in my brokerage accounts. Okay, as I said, I've got a 30k real money account that I trade, but I don't put the 30k into the broker. You may have heard of things like black swans. I'll quickly show you a black swan. Let's just find a Swissy pair. Okay, black swans happen every now and again, and a black swan can really hurt. Okay, there we go. Okay, this is the Swiss franc cap being removed in 2015. If you're on the wrong side of this trade, this is a daily candle, right? Average daily range on this pair is 82. This day, 2,500 pips it moved, right? When things like this happen, and they do happen, you don't want to have your entire trading account in your broker. In my experience, I was in this Swiss trade. Okay, I was in it the right direction, thankfully, at the time in the broker I was with, which was Alpari. Alpari went bust. They've been resurrected and bought out since then, but they went bust over this move, and I only had about 2k in there. But if that had gone against me with an unregulated broker, and that had taken my account into a 50 grand loss, 20 grand loss, whatever, you need to understand leverage. Then you're trading a leveraged product here. So your £2,000 is buying 200 grand's worth of positions in a particular currency, for example. If that goes against you, you can be liable for a massive, massive hit with an unregulated broker, which is why you need to trade with regulated brokers only. So the reason I keep low amounts in my account is purely for when things like this happen. They don't happen often. You know, it's rare. You know, you get big daily candles, but you know, it's very rare you get things like black swans and massive gaps. You know, you get big gaps for me. When these gaps happen, you want to be on the right side of it with your broker, and you don't want to have too much money in there. Most UK regulated brokers have got loss protection in place. So if there was an event like that, most regulated brokers, in fact, have got loss protection in place, which means if something goes wrong, you're covered by the Financial Conduct Authority in the UK, or somebody is covering you basically. So that's basically brokers. Find a decent one. Also, get a broker that doesn't have Sunday trading. We don't want Sunday candles, ideally. We'll cover that in more detail if you want in the trading room, but find a broker that has Monday, Tuesday, Wednesday, Thursday, Friday, and they combine Monday and Sunday into the same candle, because there's only a couple of hours on a Sunday and there's absolutely no movement. It's mainly used by brokers to manipulate the market, manipulate the spreads and taking money, so don't get involved with those if you can find one that hasn't got Sunday candles. Exposure. You will need to understand exposure on pairs. I personally have a 2-pair rule, so I will only trade 2 pairs on one currency. If I'm taking a trade on the pound US, okay, and I also take a trade on the pound yen, I am on the pound twice. So the risk I've put onto that first pound trade is doubled by the risk I've put onto the second. If I then take a third pound CAD or a third pound whatever trade, a fourth pound whatever trade, I'm entering 4 positions onto the pound. If the pound goes against me, I got 4 times the hurt I'm going to feel. Right? So when I take a trade, I will always try and only have exposure to one currency in 2 pairs at a time. Also understand the Aussie dollar and the New Zealand dollar are virtually the same thing. So if you're trading Aussie CAD and you're trading New Zealand CAD, you're trading the same thing. So try and keep your exposure low. This is also a good thing to stop you over trading and over leveraging. If you have a rule where you won't get into more than 2 pairs at once on a particular currency, it just stops you trading. Okay, so it stops you over trading and getting into too much risk and possibility of your account getting blown or damaged. Leverage. If you don't understand the implications of leverage, I would encourage you to go and understand it. When you are trading with a broker, you are trading a leveraged product, which means that for every £1 or $1 you say you want to put into the market, they are leveraging that by 30 to 500 times. If that trade goes against you in such a fashion like that black swan, where it will not trigger a stop loss and go further than you expected it to go, i.e. slippage, you're liable for the full amount of that trade movement. And you can get hurt very, very badly. So just read up on leverage, okay? If you're new, leverage is basically going to be determining when your margin call by your broker kicks in. So with leverage, if you're new, go and pick a broker with 1 to 100 leverage, start there and then move up. 1 to 30 is a little too tight, but if that's all you can get and all you're comfortable with getting, get it. But you might find you run out of margin fairly quickly. So leverage of 100, 100 to 1 or higher is what I would recommend. How to install indicators, configure them. Any questions on the order block, indicator or dashboard, please put those through the Telegram group. I don't really want to be covering things like how to install indicators in the live room experience. It's just, this should be basic stuff. And if you've got Google, you know, you can find out how to do this. Google is your friend. Any question you've got, I would say go and Google it first. If you can't find an answer on Google, come and ask. Clean charts, strip them all back, keep only what's important on the charts. I've covered this. We want to see price action. You can't see price action if you've got 500 indicators on a chart and you can't actually see the candles. Looking left is something very important. If you don't know what look left means, you're going to have to get used to it. I'm going to be doing this a lot. On a chart, this is what we call the hard right edge. This is where we're trading right now. We can't see anything in the future. We can see the past, and that's what I mean by look left. Whenever I say look left, we're looking historically back through the chart to see where levels are. For example, we got a lovely double top here. Okay, look what happened when price came back to this double top. Put in some, anybody remember what these are called? Tweezer tops, and then it pulled back. Okay, price has come up, it's moved back down to this level. Okay, it stopped, respected it again. Okay, you can only see why price is doing what it's doing by looking left and seeing why it's doing it. Why did it react here twice? Because it reacted here previously. All right, so when I say look left, this is what I mean. Open your chart, zoom out, look to the left. Any other basics you want to know, just ask those in the Telegram group. Ideally, anything in the live room that I don't think is going to be relevant or not enough people are going to benefit from the basics, real basics, we'll go and answer those in the Telegram group. It's easier just to point you in the direction for Telegram than it is to cover it in the live room. Okay, finally, this module, we're going to look at your first piece of homework. Homework is basically to get the templates installed with all of the indicators. I want you to try and decide what time frame you want to trade on. Everything that I'm going to teach you and talk about is going to be, well, most of it is going to be fractal. You can use this strategy and what I'm going to talk about and see what's happening on any time frame that you choose. So have a think about time frames, think about what I said about how much time you can dedicate to the charts and to checking your charts and your psychology and your temperament and what you think is going to be the best time frame to trade on. Yeah, so think about whether you can wait for an H4 or a daily setup to play out over weeks or if you need to get faster gratification. So that's one of the main things you need to think about when you're looking at time frame. I want you to go through a few pairs. Go back in time and use F12 to scroll forward and look for candlestick patterns. And I want you to see what happens to price when these candlestick patterns happen. I want you to mark them with a red line so you can see what works and what doesn't. Okay, so I'm just going to quickly cover this and show you how to do this in MT4. So what I want you to do is, to be able to scroll back in time, you need to uncheck this button. Scroll the chart to the end on tick incoming, which basically means every time there's a tick in price, the chart will automatically jump back to the front. Turn this off and you can scroll back in time as much as you like and it will stay there. All right. What we want to do is zoom in to a decent level where you can see the candlesticks nice and clearly. Okay, and we're going to start here, for example, and this is a perfect example to start. There I can see a hammer. So I want you to just mark the hammer. Okay, hit F12 on your keyboard, and what will happen is price will just go through one candle at a time. And I just want you to see what happens when you mark these candlesticks. What happens to price? So on a hammer, we're expecting it at the bottom of a move down to promote a move up. What have we got here? Big bearish engulfing candle. Okay, step forward. Okay, and just step through time and just see what happens to price after these candlesticks have formed, and what you would expect price to do and what actually happens. Okay, so in this case we had hammer, which you can't see now because the red line's on top of it. We had hammer formed, and we expect price to move up. We had a bearish engulfing formed, and we expect price to move up. What happened? Price moved up. Okay, bearish engulfing happened here at the top of a move up. We're expecting price to drop. What happened? Price dropped. Hammer. We're expecting price to move up. What happened? Moved up. Okay? So this is basic candlestick pattern recognition. This is what I want you to spend time doing. Go through your charts, identify the candlestick patterns that we've talked about, and basically see if you can find those on the charts and just get used to seeing them form. I'll quickly go back and I'll leave those up there for a second. If you want to take a quick print screen of that, or just scroll back in the video if you need to. And those are the candlestick patterns I want you to look for. All right. So that's the end of module 1. Hopefully that's laid down the groundworks. You've got a good understanding of what we're going to be covering in the course. You know what you need to do from now on before you go on to the next module. If you've got any questions, as I say, you can always find me in the Telegram group and ask questions in there. But if not, we'll see you in module 2.